All right, Robert, I know you're going to get tired of these Black Friday deals, and I guess this is only going to work another couple of days because it's that weekend. But you know what else is on sale?
More? What?
Money's on sale.
Oh, fantastic. That'll go. That always goes big. People love
Well,
that.
in the sense that we know money isn't free, but what if rates drop to 3%?
Well, if first mortgages drop to 3%, it'd be one thing. If the bank rate dropped to 3%, because it's 5 now, that also would be significant. If the stress test fell from whatever it is now, plus 2% to 0.2%, that would even be more fantastic.
Well, you
Cheaper is
know what?
always better in terms of the rental price of money. Yes.
Money is about to get cheaper. And on this episode of Real Estate Chat with
Johnder Perez.
and Robert Eid, we're going to chat about a chat about interest rates dropping. And so Robert and I are real estate brokers. We are licensed with the Toronto Regional Real Estate Board. And while we can't share specific information about a recent fall general meeting that occurred, there was an esteemed economist that was a part of that presentation. And Robert, correct me if I'm wrong, but we can chat about things that we've heard.
Oh, sure, because we heard it.
We heard it. And one of the things that Mr. Benjamin Tal mentioned on his talk, and I'm sure you'll see this. This will pop up probably in articles at some point or in presentations near you at some point. Interest rates will drop. We're not economists, Robert and I, we're real estate brokers, but the economists say interest rates will drop. That will affect real estate. They'll drop by around May to June 2024. That is the projection. And they may go down to 3%. Now, Robert, I got excited. I texted you because we were joining this thing virtually. And I'm like, wow, Robert, 3% by May, June 2024. But what did you say, Robert?
I said that he did talk about May, June of 2024, and he did talk about a target for the bank rate of 3%, but he did not say those two things together. He said that rates would start to come down so that we would see it by May or June. Now, the first time down, it's a quarter. The next time down, it's a quarter. And we saw a bunch of times it was 0.75 up. So I think what he said was we'll see action down. There will be a pause and a go down for May, June. And eventually, so let's add a year to that, maybe longer, middle or end of 2025, which is 18 months from now, we'll see the bank rate down to 3. And that means mortgage rates will be 4.
So I got a bit too excited too quickly because in as much as money was cheap for a long time, then it went up and didn't become cheap. Some of our colleagues have said that, of course, as fast as the Bank of Canada raises their rates, they go down quite quickly. And so I came to that conclusion, maybe it was wrong, that it would go down that quickly. But of course, with everything, we covered CPI in a previous episode. Make sure you click subscribe and like our episodes if you like them. We talked about CPI inflation rate dropping, so positive signs. Some of our real estate chat viewers seem to think, you know what, rates cuts won't happen. In fact, maybe rate hikes will continue to happen because it's probably more likely that that'll happen. But Robert, the implications of this, because when you look at our real estate market, it's seasonal. Therefore, it's winter season now. The next busiest season is
Spring, of course, yes.
spring 2024, and the government will likely not touch anything. And that will, of course, let the spring market do well. And then the first cuts projected, according to economists, May, June. What happens then? Like we talked about in the past too, it's the perception of the rates going down, instilling consumer confidence. But the naysayers are saying, you know what, we're not in a position to cut rates at this point. In fact, let's let them. I don't know anybody who wants to pay higher rates, but Robert, what's the play, I guess, for our real estate chat viewers?
It's selectively do nothing because it's bad news is good and good news is bad. Now, right now, they're feeding us a lot of good news, projections of the future and everything like that. It's Christmas time. It's November. Do you think December number, which is based on November, is going to be better than October? It went down. Well, maybe not. So interest rates, when they go down, will go down incrementally, a quarter, a half, a quarter. Okay, so it'll take at least 1 year from when they start to go down a point. We need them to go down 2 points in order to get people back where they were ripping and roaring at 3% mortgage. But the market that we had before was based on 0.75 to 175 on 5-year money at less than 2%, ridiculous. And it had been going for a long time, and so people were exuberant. And they thought there was a return to that going at the spring of this year, when we had a rally, an untoward rally that never should have been. And so because of that rally, we had to have more interest rates to go up to say, no, it's not a pause, it's an up. That's what we want. We want to stop you from doing that big ticket buying on credit. So if you're a seller, decide what you're going to do. If you're going to sell your home, that's one thing. Decide where you're going to go and decide to do that. If you're disposing of a property that you do not own, I would say do it as soon as possible. Prices are going to be lower 1 year from now than they are now. So a discretionary house that you don't need as an investment, if you're in the money, sell it. Take the money. Decide whether you want it to close in January or December for how you're going to arrange the tax year, and take the money in. If you're a principal residence and you're moving from one to the other, then you're looking for an ideal one, and you're going to sell your one that you want to change for some reason. And if you're last time seller, well, you decide. You decide. Is it now? What's best for you? Does $50,000 really make any difference to you? Oh, you're making $1 million or you're making $950. Is there any difference? Sure, there is. Every dollar counts. But the perks, anyway. So Johnder says, what should we do? What should we think? Understand that everything is an exaggeration, and that everything bad that happens in the economy is good for rates going down. So which one do you want? Bad news, which makes rates go down, or good news, which makes rates go up? It's a toughie.
Well, there you go. And Real Estate Chat viewers who are watching this, you have a time window. I mean, everybody watching this, there is a time window. And yes, we're real estate brokers, so our job is to sell houses. But you know what? We've always been, if you watched our previous episodes, all about you do what's right for you. If waiting and not buying and renting is right for you, that's what you do first and foremost. Don't feed into, oh, I have to do this, I have to do that. But the one thing is for sure, Robert, you can agree or disagree with me. Let me and let the Real Estate Chat viewers know is that buyers on the way of prices going up and listings were going scarce, getting into multiple offers, homes selling in less than a day, we're asking for listings. Now there are listings, some listings. You've always pointed out that yes, there are listings, but there's still limited availability because of factors such as certain demographics not selling their houses. We've also covered that. But Robert, this may be a window of opportunity where anybody who does want to make a move ahead of rates going down and prices shooting up, because everybody's going to jump in when everybody else jumps in again. Do we have a limited window of opportunity between this episode and the spring market per se to secure a deal, if that's what we want?
Okay, it's not a commodity. It's not a surge as you're grabbing in NVIDIA on the way up before it comes down. You're buying one house. So you deal with it entirely differently than a chart. It's not a commodity. It's not gold going up. Like gold should be going up, but it's not. So it's a lot of things that don't make any sense because we're in a managed economy, and the managers are incompetent, and the managers don't want to look incompetent. So they're managing it more terribly than you can ever imagine. And we're just having to float along with it. But real estate chatters, most of them are small investors looking for first or maybe second investment. Don't buy it. Don't buy it. Unless it's on the main street and you can put 4 units there. Don't buy it because the price is too high. Guy's dumping it. Watch it, watch it, watch it, watch it. It may be available in 3 months. If so, then you can buy it for cheap. If you want to buy a house, buy the house that's in the best school. I've said it a million times. Best school district, good shape, good neighborhood. And ask the owner to give you a concession on the price and to give you a concession on the interest rates. All he's got to do is cover you over the next 18 months or so until we get back down in manageable level. And probably sometime between then and now, there's stress test. We saw the first bit of it for insured mortgages on renewal with at the end of the renewal term go away. We can see it go away for everybody. We don't need a stress test in a falling interest environment.
All right. Well, there you are. Real Estate Chat viewers, let us know what you think. Let us know your guesses. We always love hearing comments about guesses about interest rates, nay or yay, up or down, sideways, whatever. Do the right thing for you, however. Okay. Thanks for watching this episode of Real Estate Chat. Take care. Thank you for your support. Bye for now.
See you later.